Right, so there's the pre-market analysis. I wasn't around for the open. I already had this short in gold. Now, if we refer back to the pre-market analysis, I was talking about the article I'd written. There's a series of articles I write for FX Street. You can check them out. Gold analysis. They're always there at the start of the week before the market opens in Asia. And I was talking about how 116.75, sorry, 1675 would be the target. So we've exceeded that, and we've actually moved into the 60s. Now, um, we've got the US CPI, retail sales, FOMC, all scheduled for this week. We've got FOMC speakers. The non-farm payrolls were solid enough uh, to maintain the long sentiment in the US dollar, and that's essentially what we're seeing. So you can go and check it out. It's there on FX Street. There's also a good report about the CPI from Yohei, which you can check out. Just type in here CPI and what to expect, and there it is. High expectations may trigger a dollar buying opportunity. Now we may have already seen that. We've got the Dixie, which has exceeded last week's highs. We are heading, in my opinion, towards 114, and I'd like to see a higher move in order to come down into the neckline of this MW formation. Uh, Bonds are also looking as though they want to continue higher. I'm getting lots of errors for some reason with TradingView today. So there we have it. There are the bonds. They're moving up towards the month's highs, last month's highs. And I think they can shoot through and come back into this W formation. So that's good for the gold position that we have on. I wasn't able to do anything. Well, not much with it well, we're coming right into there. Okay. Right, I need to be doing something with this. Hold on. Right, I've taken the money there. It's come into an order block. Now I had my target for lower, and so be it. But I don't want to be swing trading this, and this can come right back up into here and consolidate over the next day or so. So let's just take that money. As I said, it's came into this order block over here. We had a low of 65. That's a psychological number. We do have this price and balance. I mean, it's probably going to come low, and so be it. But I'd rather take the money at this point. This has been a huge move. It's exceeded 3 times the consolidation period in a measured move. Yes, that bar is extremely bullish, and yes, it probably is going to continue lower. But yeah. So yeah, I mean, we took the money at the low of this hourly candle, which was the candle which sparked the rally, right? So it's not a bad place to be taking the position off, and just ahead of the midway point of this order block candle, in terms of the closing price, closing and opening. So I'm happy with that trade. And tomorrow's another day. So we've got the weekly lows eyed at 116.60, and I'd imagine that we will see a significant retracement at this point before coming back in. But that will all depend on how the week evolves with the sentiment around the Fed and the forthcoming data events. And in this move, we have essentially taken back the territory of this entire bullish impulse, choppy to begin with, and the final surge into take it out. And we are at the turn of the hour. So if this is going to make its move, it's going to make its move. If not, this is going to be a bullish candle, and you're going to see capitulation, perhaps, of speculative shorts, and then you've got stops, break-even traders, and so on all around here for a consolidative period. That's my thesis anyway, but I could be well wrong, and this could just continue lower. The key to that is assessing what is the driver. Is gold driving? Is the dollar driving? Are yields driving? What is it that's moving the market, or I should say leading the market? We've got US yields there, 10-year, striking 4% almost, coming up to it, 3.992. In terms of the range of the day, it's around about $27, and we 99 minus 65. So we've exceeded that by $10 already. Almost $34 we've moved today in one day. So looking around, we've got the Aussie dollar here on the back foot, obviously. It's had that consolidation zone, so we've typically, you're going to see a breakout, a strong move. I was saying before, it's obviously more than likely to the downside if it's going to be a breakout, and that's what we've got as per the analysis. Again, if you want to follow my analysis, I do regular news articles on FX Street in the news feed. You can see all of this before it happens over there, and I talk about it on this channel. It's all drawn. This is all drawn up before the move, before the moves happen. I'm just trying to get rid of really sticky trading today. And that's my computer. I'm borrowing someone else's computer because I trashed my Alienware with water. So you can see that this is all drawn in before the move. I talked about the price. You can see it there. I talked about it coming up into here, being sold off, and that's what we've got. I talked about it being bought up in here, and the move, and there we are. So same thing with the Kiwi, GBP. Right, so we've got cable here in a consolidative zone, which is interesting. We've got some Bank of England fundamentals in here. I'll do a separate video on that. And then we've got the euro also consolidating. These markets are pretty wild and volatile, to say the least. So the move today is basically gold, dollar, we've got oil that's starting to decelerate at last week's high and Friday's high, so it's decelerating on the bid. So that is good for our US dollar CAD thesis to the upside. That was a short taking it down stops. Just get rid of that. That's old news. So looking for an explosive move to the upside. Right, we'll leave it there, and we'll continue with ongoing reports for the rest of the week. Good start to the week. Cheers.